Hello everyone, welcome back to my channel. So this video marks the end of week number 40 in this road to 100k realized return challenge, and it has been overall a positive week. The indexes, the markets apparently have managed to turn the corner on all the gloom and gloom that has been going on over the past month or two, and markets have been pretty much on the up every single day of the week. I can show you here, if you have a look here, where we stand in terms of the triple Q, the QQQ that tracks the Nasdaq. And as you can see here, barring Monday here, which was a day that ended up pretty much where it started, the other days went pretty much in the green, except here there was a big gap, but over the course of the day the index managed to basically recoup all its losses, and then the rest of the week was pretty much smooth sailing without any sort of bumps in the road. And yeah, overall it was a quite positive week. Not so much in terms of our options, and the reason is that I can show you here. So we managed to collect up until this point a net positive. So we earned a profit of just $21 this week, barring of course this option right here, which is still live, this put that we sold on Pfizer at $23. So we are because it will expire only next week, we have then to wait to see what's going to happen, but we suppose that we will expire worthless anyway. But the reason why we had these losses was because here on Monday, so we had this one on Monday, and we had two of these on Wednesday. So, and if we look here, it was basically because here on Monday, and you can see here, basically the index went down, and then it was more or less at around this time, at around 4 o'clock, something like that, 4 or 5 o'clock, that we sold our calls. But then the market basically recovered completely, and because of that, our stop losses, our stop loss was triggered, and so due to that reason, we basically could not rip any reward out of that, because as you can see here, we started by collecting the money from one of the calls that we sold here, and it was basically right around here that we sold the call. The call basically went almost worthless by this point here, and then by the late in the session we sold another call with an inferior strike price, but then we just got stopped because of this big recovery that occurred later, late in the session. These are the things that usually you cannot predict, and you get caught up in these situations, and that's why it's good to have the stop losses, because otherwise you would have a large loss. So this was one occasion in which the stop loss ended up saving us, even though of course we got still a loss, but a relatively smaller one than a small one relatively to the one we would have if we did not have a stop loss. And also, as you can imagine by the chart here, the other two losses that occurred on Wednesday is because of basically of this graph right here. So as you can see, and I'm going to zoom in, this was basically the situation that occurred on Wednesday. This is the trading day of Wednesday, and when we sold a call right around here, and this was a call that had a strike of $474. So because it was trading at around 10 points lower, so around 465, 464. But here, as you can see, we were triggered, the stop loss was triggered by around this point, because and by that point the loss on the call was significant. And this was a situation in which if we did not have the call, the stop loss, we would continue to accumulate or continue to have a large loss on the call, but not realized, of course, because we're still in the short within the short position. But then, considering the fact of what happened very very late in the session here, we would have gone on to either be assigned or having to buy the option back at a much larger loss. And so basically we decided we were saved in this occasion again by the stop loss. But as you can see here, even though we placed the strike a bit higher at 480, this was still a loss. And why is that? Because it was triggered by this reaction. So even though we would still be this call at 480 would still expire worthless, as you can see, because the 480 is right here, the loss that we had, that we were accumulating on the call, was enough to trigger the stop loss again. And so, but that's why basically at that point we were kicked out of the trade, and that's why we accumulated two losses. Still, we managed then to make a winning trade still on the Wednesday, because it was a trade at the last few seconds of the session. So it still allowed us to make almost $23 on the trade, and we did so much, relatively so much, almost $23 in the dying seconds of the trading day, simply because the volatility was so high that the options were priced in very very expensively. So that's the reason why we managed to make so much money in the dying sections of the trading day. But still, we ended up in the red when it comes to Wednesday, more than $120 dollars. And but then, as the next few days of the week continued, this was pretty much smooth sailing since then, because the volatility that occurred in here, and keep in mind that at this point there was this upward momentum. I waited until this upward momentum finished to input our to place our calls, and so that there was nothing to be concerned about. The options expired worthless, or basically were bought back because they were almost worthless, and then we renewed the position at the end again. Here, as you can see, yeah, so these were we managed to put 4 trades into it, as you can see here. Of course, one of those is on Pfizer, but it doesn't really matter. But here, as you can see, we managed to eke out some pretty good gains in here. And then on Friday we did the same thing. Because it was a very positive day for the stock. The option that we sold initially, which was this one at 13 cents, took a very long time to be closed out at 1 cent, and so we only managed to sell this new one at the end, in the dying sections, in the last few sections of the seconds of the trading day. But overall, it was a very very much almost a dry week, so we did not gain particularly much. But you can always see this thing in two ways. It could be the glass half filled or half full or half empty, glass half full or half empty. And the reason is that we could have lost so much more money, especially on Monday and especially on Wednesday, that in the end I think we should be satisfied, because with the stop losses really helped us to keep us away from large losses, and because of that we still managed to stay in the green when it comes to the options, keeping in mind that short calls are a bet that the stock will be lower, all right, and because the stock raised by so much, we still profited from both ends, the stock and the options, and that is always positive. When it comes to the Pfizer, as I mentioned in the previous video, I was not going to do anything until Tuesday, because Tuesday was the day that the earnings of Pfizer would be released, and apparently it was an interesting reaction, because as I can show you here in the chart, and this is the chart for the week. The market had a so-so reaction. So in Monday, there's nothing to be concerned about, because apparently this was before the earnings. But then it was an interesting reaction, because on one hand, the market was a bit concerned because revenue came below the target, but because the company managed to realize such large cost savings due to reorganization of its operations, it ended up having a higher profit than expected, and so the markets in the end ended up approving this behavior, this performance by the company itself and by the board, and rewarded this with basically a large upswing. And as you can see here, even though it waned a little bit over the course of the end of the week, the market was positively influenced by this, and initially we managed to sell a put with the money we had. We sell 3 puts on the strike of $22 here, but it came to a point in a week, and of course expiring at the end of this week, May the 2nd, but then it became almost worthless by Thursday, and so we bought these back and we rolled over to this contract, these puts right here, but at a higher strike, because the $22 strike price, the $22 strike price was 1 cent by that point, and so there was no reason for us to renew or roll over with the same strike. And so we opened up this short position on a put with a strike price of $23, and we received 14 cents in premium. And now we are waiting to see if we are going to be assigned or not these shares. You may ask why I did not sell any calls on these shares, and the reason for that is because, given the upward momentum of the stock, and keep in mind Pfizer options are not traded day by day, they are not 0 DTE options. The shortest one is a weekly options, and here, and this is the one for example for next week, which is now the closest one, and as you can see, it's not available at the strike price that we want, which is either 26.5 or 27, ideally 27. And so at this point right here, even if we look at the 2-week option, it's only 1 cent. We can get this money, we can still profit from it, but it's a very tiny profit, and the price for that, or the disadvantage of that, is that we're gonna have to keep our stock, keep our options open for the entire 2 weeks, because if we sell at 1 cent, we cannot buy these back, because there is no inferior price than 1 cent, and the commissions make it so big that even if we sell at 2 cents, with the selling and the buying back, it would most likely become a loss, and so we don't have any premiums that justify selling calls on Pfizer at the moment, you see. And even more than that, with of course we can sell at a low calls at a lower strike price, but given the upward momentum of the stock, it would not make sense because the risk of getting a sign at a lower price than the price that we bought the shares was too great, and so it would not make any sense to do so, because we would risk a large loss. And so yeah, this is it. Of course, the performance that we have for April is horrendous. Is bad because of the large loss that we took on April the 9th, because of the halt 90-day halt imposed by Trump on the tariffs, of course fueled by what for me is market manipulation, because you should not say that, oh, it's time to buy, and then you release that announcement. But as you can see here, we are very much far off for April. We underperformed massively. So we'll have to wait and see what's going to happen for May. But for the time being, this is all. For the next week, what we are going to do, we're going to let this put expire worthless, of course, because that's what we want. We want this put to expire worthless. And if we are assigned, it's not that big of a problem. It will still lower our average price. And we will continue to do the same thing with the QQQ selling calls. However, given this upward momentum, and I know that, for example, these two trades right here were because I placed the strike price a bit closer to the money that probably would have been beneficial, because the premiums were so much better, that it was probably a bit of a greedy move. And so now for next week we are going to be more conservative, because the momentum is upward, and so we have to be very conservative with the strike prices that we select for the options, because all right, we're going to receive a lower premium, but we get the benefit of the stock rising, and overall that is a bigger benefit. And if we ended up being too conservative with the premiums, with the strike price, and we place the strike price too high, the option will quickly expire, or become almost worthless, and so we can easily roll over the position. All right, and we continue to make more money out of the calls. And so that's why moving forward we are going to be more conservative, try to avoid these losses as much as we can, and continue to accumulate small premiums, because at the end this is this is the bread and butter of this strategy. For now, this is it. We will reconvene on Monday to start the week number 41 in this challenge. For the time being, feel free to like the video and subscribe to the channel. Any comments, any questions, you can use the comment section down below, or you can send me a DM on LinkedIn. And yeah, we'll reconvene on Monday for the start of week number 41, and I'll see you there.